What's going on, everyone? It is Paul, the 920 trader with 920 Trading and Trading Decoded. Today is Wednesday, February 13th, 2024, and this is how we traded SPY on CPI day. Now, folks, I've talked about this in the past, but I would take 100 CPI days over one FOMC day. That's just kind of the way it is. I'm a CPI day guy. FOMC, it's kind of a crapshoot. You never know what's going to happen. You know, Jerome Powell gets on the mic and turns everything kind of topsy-turvy. But anyway, this is how we trade SPY today. So we're going to start off in pre-market. What happened in pre-market? Reports came out. So the CPI came out, and it came out hot. So essentially what that means is it came in worse than expected. Actually, inflation was up just a little bit. Cost of goods were up just a little bit. So what happened? It took a massive drop. It took a massive drop. That's drop and that's a drop and a dump at the same time. So that's what happened right here at 8:30. 8:30 this morning. It just, boom. Now, I was talking with a buddy of mine last night, and I said, you know what? If we come in hot on CPI day tomorrow, there's the possibility that we drop about 10 points, and we're thinking, well, it could happen. It may happen. It may not happen. We never actually know what's going to happen until we get the report, and then until, kind of the market reacts to it. Now, remember, folks, every reaction in the market is absolutely an overreaction. But at any rate, this is what we did. So what we're looking, I'm not looking at pre-market high, pre-market low, or anything like that, folks. On a day like today, none of that really matters unless we get back into the zone. And at that point, we'll kind of revisit those things. But what I'm looking at is specifically, I'm looking for 30-minute demand zones down low. Again, since we had a really nice drop, I'm looking for demand zones down low. I'm looking for potential areas. Now, they're demand zones. So we're going to assume that we have specific support at those demand zones. Demand zones generally are low, and supply zones are generally up high. You get a demand zone, it basically says, I demand that you sell me a specific number of shares at this price, and that takes the price up high. Once we get into that supply zone up top, basically that's a supply of shares that are saying, I am here for the taking. Let's go ahead and sell it off at this point. So that's a difference between a supply zone and a demand zone. So I'm only looking for 30-minute demand zones down low. So I've got this first one, 495.56. We actually got there early, right after the initial drop. Looking at this next one now, this one, 5-minute pre-market double top. There's a 5-minute in here, so we're going to pay attention to this level to 494.74. I've got a pre-market 5-minute double bottom also at 493.98. I've got a 30-minute demand zone sitting way down here at 492.50. My next one down, 490.81, 489.31. And a crazy one way down here at about 487.02. I'm thinking, you know what? If we take out a couple of these levels today, we'll be doing really good. But let's see. Now, one of the first things I said, actually, I said this before market open. I said, do not get so married to puts at open that you don't look at calls. It could drop, it could go up. You never know what's going to happen. So at any rate, if your edge presents itself to the upside, you're going to take something to the upside. And if it presents back to the downside, take it to the downside as well. But anyway, don't get so married to a direction that you lose the other direction. Okay, so coming right out of the gate this morning, I said, you know what? Hey, we're a couple minutes into the day. I've got this double bottom or this double top right here. We breached this double top to the upside. Couldn't get through VWAP. So you know what? Guess what I did? I took an L. And it kept me out of a pretty good trade back to the downside. So what did I do? I took the L right in here. Actually, I got into this trade here. I didn't take this double cross to the downside, was able to get into this a couple minutes later. Took it back down. We breached this double bottom to the downside, and away we went. Nice little, not a bad loss this first trade. Nice little win in here. It was decent. So what did I do? You know what? I thought, let's take this back to the upside. So I did. I took it back to the upside. Once we breached again this level, so we got the cross to the upside, breached this level, I thought, you know what? If we can make it up to VWAP, we'll be in pretty good shape. So what did I do? I rode it for a little bit. Rode it. Took out this 30-minute zone, this 30-minute demand zone up top. I thought, you know what? At that point, we might be able to push it up. Anyway, I took it to here, and guess what? I immediately got into puts at that level. Um, I wasn't on tilt or anything like that today, but I knew that there would be enough volatility, particularly at specific levels, that I would be protected. So, at any rate, took this to the downside, this back to the upside, took this to the downside. Now, this is where it gets really, really interesting because I didn't put a smiley face. Pretty busy this afternoon, had a couple of meetings after close, so that is why I am late. Um, this play, I was kind of waiting for this setup in here, Had a couple of different lines in here. I didn't take it here, but I took it here. I took this play in here because we got a breach back to the downside right over here, and this got us through this level again. This demand zone where we would expect a little bit of support, but we breached that support to the downside, rode it. I caught a couple of these plays back to the downside. Beautiful, beautiful. And we're getting through these demand zones with relative ease. So I took a couple of these plays. I should have put them on my chart, but again, busy afternoon. A couple plays back to the downside. Now, here's where it gets really, really fun in here. We had this demand zone down in here that if we breach this, I was looking for 489.31 to the downside. But guess what? I said, you know what? I don't think we're going to do anything. And at this point, the POC dropped down to this level. And I thought, I think it's going to come back down. Now, I didn't take puts in here. Number one, because I wasn't close to a major level of support or resistance. What we're trying to do is to the upside, we want to cross to the upside and we want to be directly above a major area of support. That way, if it breaches in the other direction, we know exactly where we are going to get out of the trade. So the same thing holds true back to the downside. You want to take your puts on a cross to the downside directly below a major level. So this becomes new resistance in this area at this point. Take it back to the downside. That way you can limit your risk. So, I kind of kicked myself for not taking this, given that the POC was right in here at 491.22-ish. I could have, I didn't. Instead, what I did was I waited until the end of the day. So we got that 350 candle. I think it's red. It is red. Red 350 candle right into support. I'm thinking, you know what? We got support directly below us, 492.50. Let's see if we can kind of get that last play of the day, maybe make something out of it, maybe not. Relatively small position, but even on these small positions late in the day, particularly if you're playing SPX. If you're playing SPX, you can turn one of these in here into a massive, massive, massive gain. I was in and out on this same candle, 15.55 for a massive, massive win. I thought, you know what? Let's take it up, see if we can get up to VWAP. It got up to VWAP, closed out. So I marketed it into the trade and marketed out again. Low risk because, again, I had this 9 as my support. It could have very easily gone the other way as well. A little bit late in the trade, but nevertheless took that back to the upside for a big win. Now, if we look at today on a higher time frame standpoint, so here is the higher time frame. This is the 5 minute. Look what that 5 minute did all day long. And I talked about this. Actually, I sent it out in a newsletter on Saturday. If you don't have the newsletter, head on over to 920trading.com and sign up for the free newsletter. It comes out every Saturday. 5 minute, look at this. Nice to the upside. Once we breached back to the downside, bounced around, and look at this. You could have ridden this thing all the way down. Could have, because again, the 9 is our resistance on the way back down. At this level in here, you're probably closing out the trade only because that 9 on the 5 minute breached the 20 back to the upside, and it was above this demand zone. So you could have thought, you know what, it's probably going to go up, or it may have gone up at that point. But again, that's the higher time frame look. We like those higher time frames, folks. We want to execute on the 1 minute because the 1 minute gives us more precise entries. But once we're in that trade, we want to switch over to either the 5 minute or the 3 minute. So here's your 3 minute. That's what the 3 minute did. You can use either one of those things for trend confirmation. Now, if you're getting really crazy, you can look at those really high or the higher time frames and look at the 15 minute. This is what the 15 minute did today, folks. So again, low time frames for your entry and higher time frames for your exit. Now, again, that's just my opinion. That's how I like to trade. But that's how we traded SPY today. It was a really, really big day. Now we could make this bigger and see what it really did. I mean, it was a really good day. Now, if you like our content, please consider giving us a like and a subscribe. Don't forget to turn on your notifications. That way, when we drop new information, you're going to be one of the first ones to know. So you can click on it and go, hey, it's another video. But anyway, if you're interested, please consider doing that. Now, if you're interested in live daily trading, head on over to our Discord. It's called Trading Decoded. The link for that is down below. We do live daily trading every single day. So from bell to bell, every single day. Come check it out. We're in there and we're talking about trades all day long. Now, if you're interested specifically in the 920 trading strategy, head over to 920trading.com. Again, that link is down below. We've got all the information on the 920 trading strategy. And again, sign up for our free newsletter that comes out every Saturday. So that's how we did it today, folks. We appreciate all of you. Thanks for spending a little bit of time with us this afternoon. I hope you did well today, but more than anything else, I hope you followed your trade process, folks. But again, I hope everybody has a great rest of the day, and we will see you in the markets.